If you're wondering about the differences between term life and whole life insurance, you're in the right place. Today we'll break down the pros and the cons of each to help you make an informed decision. I've been in the financial services industry for over a decade, and I'm your guide to navigate it. Whether you're thinking about protecting your family, building wealth, or just having peace of mind, understanding the right kind of insurance is crucial. So let's dive in. What is term life insurance? This type of policy lasts for a specific period, usually 10, 20, or 30 years. If you pass away during that term, your beneficiaries receive a death benefit. Term life insurance is often the more affordable option, especially for young people, those on a budget or looking for pure protection. Term life insurance, by definition, is temporary coverage, typically purchased for a fixed term. By cost, much more affordable than whole life insurance as premiums are fixed. The benefit is purely death benefit and no cash value component. Who is term life insurance for? It's for people with specific financial goals like paying off debt or protecting dependents for a limited time. Example is like mortgage or your children's college. What about whole life insurance? Whole life insurance lasts your entire life as long as you keep paying your premiums. Whole life insurance also builds a cash value over time, which you can borrow against in later years. But this type of insurance does come at a higher cost. The definition of whole life insurance is lifetime coverage, meaning the policy doesn't expire as long as the premiums are paid. Has a cash value component, which means it builds up savings over time, which can be borrowed against or withdrawn for a fee as a loan, but must be returned. The premiums are typically higher, but level for the entire life of the policy. So who is whole life insurance for? It's for people looking for a long-term asset that wants to do wealth building or estate planning. So what's the key differences between term and whole life insurance? Understanding these differences can help you figure out which one fits your needs better. Term life insurance is only temporary for a fixed amount of time. It's more affordable, it's a pure death benefit. Whole life insurance, on the other hand, is coverage for your whole life. It's much more expensive and includes a cash value component. Term life insurance has flexibility. It's straightforward and affordable, while whole life offers more financial planning options through loans and withdrawals, although it can be a little bit complex. The cost comparison to term is ideal if you're looking for the most coverage for the least amount of money. Let's break it down even further by looking into the pros and cons of both options. This will help you make the decision even clearer. Term life insurance pros is that it has lower premiums. It's ideal for temporary needs like paying off a mortgage. It's simple to understand as well. Term life cons is that there's no cash value component. The policy ends after a term expires. The pros to whole life insurance is that there's lifetime coverage. It builds cash value you can use while you're still alive. The whole life insurance cons are that they have much higher premiums because of fees, and it's typically more complex and harder to adjust. So which one should you choose? Ultimately, the choices between term and whole life depends on the individual needs. Choose term life for affordability and temporary coverage needs. Choose whole life if you're focused on tax benefits and don't really mind the cost of the fees. Now that you understand the key differences between term life insurance and whole life insurance, you're ready to take the next step in your financial planning journey. And I know you got some value out of this, and to improve your finances further, come check out my other videos.